There's a whole financial world out there that Fortune and Freedom does not cover. And today I've asked my friend Jasmine Birtles from moneymagpie.com to help put that right. Jasmine, it's good to see you again with our roles reversed. I'm interviewing you this time. Can you explain to us how your focus at Money Magpie is more on what I would call the micro?
Yeah, absolutely. We cover, I suppose, an holistic approach to money. I set Money Magpie up back in 2007, 2008. And at that time, there really weren't that many money sites around other than sites like the Motley Fool that dealt with investing, and then there was money saving, but there was nothing that in my view covered an holistic approach to money that looked at money saving and money making, because I've been freelance all of my life, and I've done all sorts of things, and I have a lot of friends who are freelance, they're actors, they're writers, whatever. And everyone, including me, has a little bit of a side earner to supplement their normal income. And there were no articles that, well, yes, there were no articles, no websites around that covered that part of earning a bit of extra as well as saving and investing. So that's the way I see Money Magpie. We sort of cover the whole base, and go, look, it's about saving your money, but you can also make a bit of extra. And by the way, with this extra or with what you've saved, you can be putting it into investments and make yourself a really nice pile of money later on. So it's sort of threefold, really.
Yeah, those are the three focuses: the saving, the making, and the managing that are on the website under the three tabs. But what I really noticed about it when I went and researched your site was there was sort of a very direct, practical, specific. I think specifics is the key word for, real examples of what you can do and how to do it, rather than, something abstract or indirect or, some people do this. It was much more, and that's what makes it engaging as well as these specific ideas.
Yeah, absolutely. Because again, I don't have time to mess around in my life. I'd like to know, what is it? How much can I make from it? How do I do it? Can I do it now? That's what I want to know. So I kind of feel that's what everybody else wants to know. And we are really keen. We try to put it in normal writing, normal words that normal people can understand, and not use things like words like have exposure to this in the market, the way the city boys talk, and just say, look, mortgages, finding the right mortgage is like finding the right tin of baked beans. You just sort of see what is it that you want, which is the cheapest version, fine, go for that. So sort of put it in normal language that normal people can understand.
And you also help people figure out what parts of the website are most relevant to them by having different segments of different types of people: the unemployed, over 50, students, so on and so forth, but, which I thought it's really helpful. But let's move on to sort of the state of the UK's individuals in terms of their financials. I noticed there was an article on your site. It was about the Great British Retirement Survey of 2021, and it had some surprises in there, such as half of people, or slightly more than half of people, believe that their state pension won't be there for them by the time they retire. Most people suggested that they become wealthier during the pandemic, and a majority plan to find alternative income sources, as you just mentioned that you have. So there seems to be a lot going on. What's your take of the main trends?
Well, certainly the last 18 months has seen an increased polarization between the haves and the have-nots. In fact, I think it was the Resolution Foundation that found that the top 10% of people in this country, and I'm sure it's the same in America and other parts of Europe, um, the top 10% actually increased their wealth by a significant amount. In this country, it's by £50,000, whereas the poorest made 87 pence. So, already we were seeing a parting of the ways. 2008 was not good for equality. Quantitative easing started then in earnest, as you know, it's continued. Over the last 18 months, it has gone ballistic. And that has meant an increased polarization between the haves and the have-nots. So that's certainly one thing. Having said that, as you say, a lot of people, middle earners, actually did quite nicely over the last 18 months. So long as you were on furlough or were able to work from home, you didn't spend that much. You managed to pay off your debts. You managed to put some money into savings. So it has been quite good. I think going forward, this year, next year, people are worried. They are worried about inflation. They don't know how long it's going to be there. They don't know how much it's going to increase by. Everything's very uncertain. And of course, the government's already starting to flat the cushions and saying they're going to grab some money back from us in probably stealth taxes. I mean, it's going to be, taxes in some sort of a way. So people are concerned at the moment. There is more activity, much more activity, certainly, and that's of course one of the reasons why we have inflation. But there's a nervousness. Nobody really knows what's going to happen next.
Yeah, the world's changed just like in 2008, which is a good time to be writing the blog that you do, because you can help people with what's shifting and changing. And I think now's the sort of time when people are waking up and realizing they need to figure things out. And they go to moneymagpie.com to figure them out. Let's move on to the topic that I straight away wanted to chat to you about. This is the one that I'm personally most interested in. And it's the idea that everything has become financialized. All sort of segments of our world have become financialized. For me, the most obvious example of that is when I go into a shop to buy furniture or white goods or whatever it might be, the financing terms that those things can be bought on seem to dominate the actual purchasing decision. The advertising for the financing and the interest is bigger than the actual advertising for the sofa or the white goods, and that's been around for quite a long time. In Australia, it's a lot worse than the UK actually, but it's the same sort of thing. I had a reader email in about this issue saying, the price of oil went negative, interest rates went negative. There's all of these bizarre things going on in the world that are all part of this financialization of everything. The gold investors like to talk about the futures dominating the gold price. It's another example.
Yeah.
It just seems to me that financial markets just seem to rule our world so directly now. And I'm getting sort of a bit scared of it, because they're not exactly the sort of place that you want to have ruling, your day-to-day life.
No, I agree. And as you're talking, I'm thinking about, say, the 90s and the early, but basically before the financial crash, the banks, certainly in this country, probably in America and Australia as well, um, we're kind of doing the same sort of thing. You would walk into a bank, back when we walked into banks on high streets, and the first thing you would have would be somebody at the door going, "Hello, have you thought of life insurance?" And of course that we had the mis-selling of PPI, payment protection insurance. So you would go for a loan, and they go, "Yeah, you can have a loan. Anyway, what you really need is payment protection insurance because loans, and it is absolutely, as you say, it was the case. Now that was a mis-selling scandal. It all went horribly wrong. Banks have had to pay millions and millions in compensation over a few years, and every time you have that sort of thing, ultimately, I mean, it'll last for quite a while, but then ultimately, some pressure groups get so strong they go, "No, seriously, this is wrong." It all falls apart. So I think it will fall apart here, and again, I'm sure in America we have buy now, pay later. There's a Swedish company, Klarna, which is doing very well, and of course lots of others are following. PayPal's doing it, buy now, pay later. And you see posters all over the place, particularly for fast fashion, ASOS, Boohoo, and there are big signs on the posters going, have it now for free, pay it for it later. So you've got Klarna essentially piggybacking on Boohoo and ASOS on their advertising. So yeah, I think that's a very, very good point, and it's not one that I'd thought about recently. But you're right, everything is financialized. It's like, give us the money, insurance, have this, and then, oh yeah, the actual asset. Yeah, you can have that if you want. Yeah, whatever.
The biggest example that's taking over in the UK right now is this pensions idea, this opt-out pensions, where a chunk of our paychecks being taken automatically and getting shifted off to financial markets, to financial funds and fund managers. Nobody really understands what they're doing. Nobody really follows it or cares or pays attention. And this just, that is the money that's supposed to go to securing your retirement. And what strikes me about this is it's the exact opposite to the mentality that I think you're putting forward, where it's take responsibility for what's going on in your financial life, whereas the government's saying, don't worry about it, we've sorted it out for you. And I think that difference and that gap is really interesting. So
Yeah.
do you think what do you think people should be doing? Do you think they should be paying attention to people like you who are trying to shake them and say, you've got to get this sorted? Or do you think they should believe the politicians that, the pension funds have got their back?
Ooh, tricky question. Should they? Should I think they should believe me, Nick? Actually, given what history has shown us, and to be frank, given what governments in the last 18 months have been doing and saying. I mean, I was brought up, to be law-abiding and support the government and whatever. And in the last 18 months, first time in my life, really properly, I've thought, right, that's it. Honestly, guys, I've had it with you lot. I've had it with you lot. But yes, when it comes to your money, one thing that does concern me about pensions, particularly in pension funds, is the fact that they are, it seems to me, so invested in bonds at the moment, and the bond market is worrying. It worries me. I mean, I'm not a bond specialist at all, but everything I've heard about is like, I wouldn't touch them. Bonds I wouldn't go near them. And I keep thinking, who's putting them? Well, it's pension funds. Now that to me is a bit worrying, honestly.
Yeah, it's this mindset. It's also regulatory. We've discussed some of the incentives behind this bizarre situation in the bond markets, where the interest people are earning on the bonds are ridiculously low, especially adjusted for the inflation that you and I have discussed. The whole thing doesn't make sense. Part of that story is the idea of financial repression, the idea that the government's in so much debt that the only way to escape that much debt is to have inflation above interest rates, which reduces the debt burden. The problem is that effectively taxes by the back door in secret ways the bond holders, which is our pension funds. So I think the story there is that the government's putting its own finances ahead of the investors, and we should be keeping that in mind.
Yes, we should. Increasingly, I do feel that when it comes to pensions, we individually do need to take a lot more control. I mean, I tend to talk about retirement funds rather than pensions, because pensions are just one of the things that you can put your money into. There are a lot of advantages, tax advantages, etc. So, it's a nice one. And I always tell people, if you're employed, unlike me, if you are actually employed, you've got a nice employer giving you money into your pension, max it out. But then, we need to know where that money is, and ultimately I think people should have their own SIP and their own ISAs and their own all sorts of investments. Frankly, that's what I do. It's across a range of things, and then you personally have more control and more safety, frankly.
What are the top mistakes that people who come to your blog look for help for? What are the things that they're doing wrong most commonly?
Well, one of our most popular articles is called "Help, I'm 50 with no savings. What do I do?" So I would say, one of the biggest problems for certainly people in this country is that they don't save. They haven't saved for various reasons, and much of the time it's because they didn't know that they should, and they didn't realise that if they could just put a tenner away each month when they're in their 20s, and that would actually make a difference in the long term. The other thing, this came out very much in the retirement survey, Great Retirement Survey, is that people don't take risks. Um, they don't understand risk. They don't understand the relationship between risk and reward. And in this country, we have this sense, really, that the only thing the stock market does is crash. That therefore, you mustn't touch the stock market because it's very risky, it's terrible, all it does is crash. You've got to be safe and put your money into savings accounts. And yeah, okay, there was a time when I remember, just before the crash, in 2008, you could get 6% with savings accounts, but mostly on average, they've been pretty pathetic. And so people have done that. They've put their money into cash ISAs, they've put their money into savings, maybe property. That's the other thing. We do savings and property and premium bonds. Those are the only things that people put money into, really, in this country. And then they've realized after a couple of decades that, damn, or 3 decades, should have put it into, a tracker fund or just some sort of stock market fund, because they've realized that those who did actually have done really nicely over the time. So I think, the risk element is a big one for everybody in this country. We need to understand that risk isn't what it sounds like.
Yeah, and that highlights that growing divergence we mentioned earlier between the haves and the have-nots. So if you have saved and you have invested, your wealth diverged completely from the people who haven't. How do you
Absolutely.
go about motivating people to do these things, to understand this risk and return trade-off, and actually put that money away and actually put it to work?
Well, good point, because all the time that I've been a financial journalist, I started it off. Actually, I started being a financial journalist end of the '90s when I was just working. I was freelance. I've always been freelance, as I say, working in the BBC Business Unit, and I was reading this stuff and thinking, "Gosh, this isn't hard. This money stuff. It's just common sense. How come I didn't know?" And I realised, well, nobody taught me. Nobody ever taught me how to manage my money. And so I thought to myself, well, I'll make it fun. I'll make it enjoyable. I'll make it simple so that people like me. I did an English degree. I have no maths background. I'm not a clever economist like you. But most people in this country aren't. We're very innumerate as a country. So I just decided that I'll make it fun. I'll make it interesting. So I do webinars, and I do live shows when you do live shows that are kind of semi-comedy shows, because I have a background as a stand-up comedian. And so I put lots of jokes in, I make it fun, and just sort of chatty. I used fluffy bunnies to explain compound interest. I get people up from the audience in live shows. I make it sort of solid. You have to make things as substantial as something that you can get your hands around, like, as I say, tins of baked beans, to explain it in really, really basic terms that, as I say, people like me can listen to and go, oh yeah, I get that. Oh yeah, yeah. And actually that's quite funny. And oh look, I've just learned something. So that's how we do it. And same with the articles, with the podcast, we do webinars, just and constantly bringing it down to normal conversation, normal words, normal phrases that normal people would use. And our investing articles are very much aimed at people who know nothing, which I know is about 90% of this country. So, I've got a nice big audience there potentially.
Let's turn to the issue of debt. We've been focusing on savings and investing, and making money, but I think for a lot of people, the big issue in their life is this issue of debt. And well, I don't know where to start, because to me, the real story is that they've been tricked into borrowing too much with excessively lower interest rates to try and stimulate the economy. So as far as the central bankers are concerned, and the government to some extent, borrowing equates to economic growth. And that's why they use interest rates to try and spur on the economy, because the interest rates affect how much people borrow.
Right.
So on the one hand, there's this unfairness of what's been done to people. And on the other hand, if you borrow money, it is your responsibility. And there's this idea that you've got to pay it back before you're going to get anywhere in terms of savings and investing. Where do you lie in terms of that? Is it sort of the individual's responsibility and you just need to get at it? Or do you think, the situation is deeply unfair?
Well, yeah, a bit of both, to be honest, because as I was saying, in this country we know nothing much about money, and it hasn't improved over time. I mean, I've been doing this for 20 years, and in all that time I've been saying we need financial education at schools, we need financial education at schools, and I'm not the only one. Everybody's saying it. And yet I now have I've got a 24-year-old working for me, for example, who's just recently started, and she said that until she started working with me, she didn't realize how pensions worked, or mortgages, or savings, or anything like that, because she wasn't taught. Now, you would have thought that by now they would have been being taught. So it's not a level playing field. Essentially, I think in this country we are children in our knowledge of finances, and yet we have these dangerous financial products given to us, like credit cards. That's a dangerous, it's like giving sharp knives to people. If you know how to use it, it's very useful. If you don't, it's a real problem. And we're supposed to manage our pensions, and I do think that we should. We're supposed to understand mortgages and investing. So in theory, yeah, absolutely. Ultimately, the buck stops with us. We have to have individual responsibility. But you need to have the knowledge in order to do that. And it's simply not fair to say to people, well, it's your fault, that we gave you the pension. How are we to have to run it for you? I mean, yeah, okay, we were running it for you, but you should have looked. And of course, people aren't going to look, for goodness sake,
Yeah, that's the awkwardness of the situation. And I was chuckling to myself then, because I was thinking of, all the other things that we learn in school that are actually useful. Imagine if we weren't taught those things, how we'd go about living our life. And I'm sure there'll be a lot of disasters out there in terms of, if we weren't taught certain things. And yet, as you say, this financial education issue, which I think is international, hasn't played out. I don't think there's any particular country that's doing a good job on this, which is
Really?
shocking. And it's a bizarre situation.
Yeah.
Let's move on to what might happen if interest rates go up, which is currently the big concern, especially in the UK, but also parts of Eastern Europe. Um, the idea that we've had this downtrend in interest rates since the 80s, which has triggered people to borrow more and more money and increase the amount of debt. And now all of a sudden that might reverse, and we're in all of this debt, and interest rates are about to go up. Do you think we're in for a bit of a nightmare?
Potentially, yes. Yes, I think we are. Of course, at the moment, the economy is so weak. We are, I mean, you and I have talked about, different delicious types of inflation that one could actually enjoy. And one of them, I think the main one that we are in at the moment is stagflation. So we do, although, as I said, there is a lot more movement, it's not enough, really. We are still relatively stagnant economy. I think it's difficult for the Bank of England. They have created this cleft stick for themselves. They need to increase interest rates to curb inflation, but at the same time, they've got to support the economy. So if they do put it up, and they are saying that, the observers are saying that they will, I think it's going to be a very small amount. I think it's going to be incremental, tiny bits. Which I think if that does happen, that'll make it a little easier. People can gradually get used to it. But as you say, individuals have borrowed insane amounts of money. To buy just a flat in London, you're looking at least £400,000, at least. In fact, I'm trying to think, where can you get anything for £400,000? But it's a ridiculous amount, and wages have not increased that much in this country over the last 20 years or so. They really haven't. So people are insanely overborrowed for mortgages, particularly. And, in other areas, business borrowing is quite high, I think, because, as you say, interest rates have been so low. So, all we need is a bit of a maybe 0.5% rather than 1/4% rise, and suddenly people are going to go, oh, I can't manage it. We're going to have foreclosures, etc. So, I would say that the Bank of England needs to do things very, very gradually if they're going to, but I don't know what's in their thinking at the moment, and we don't know what shocks are going to come from absolutely nowhere, because that's what concerns me. When you're in a vulnerable position financially, all you need is one thing just completely from left field, and everything collapses.
Let's continue on with the topic of unaffordable property that you've just raised.
Mm.
I was listening to an interview with a hedge fund manager called Kyle Bass, and his argument was that in China, they've basically discovered that as property becomes extremely unaffordable, that completely upsets the balance in society. And the example he gave was that it becomes a demographic issue where young men can't afford to buy property, so they don't start families, so the birth rate collapses. And there's all sorts of similar consequences from the fact that people can't afford to buy. In the UK, in the US, and Australia, the consequence is how much debt we've taken on.
Mm.
Do you think that there's this issue well, first of all, do you agree? Has there been a real impact in terms of how we live our lives because of the unaffordable property?
Oh, definitely. Absolutely. Yes. And that has certainly impacted on family size. Because, even if you're married, if you're living with somebody, you've got two incomes coming in. In London, certainly in the south, you still can't afford a good place to live. You might afford a one-bed flat, maybe two if you're lucky, but you have to move right out in order to have children. You have to kind of decide, do I want to live in town or do I want children? End of. And it has meant it's affected women's lives, particularly. I mean, you're talking about men, absolutely. In this country, certainly, women have again had to decide, am I going to have a career or am I going to have children? children, because you just can't do the two and have somewhere to live as well. We have many more people, families renting now, which is, not a bad thing in parts of Europe, as you know. I mean, you grew up in Germany, Germans rent, and that's there are a lot of very good reasons to rent, particularly if you have rent controls, which we don't really in this country. But culturally in Britain, you need to buy your house. If you don't own your own home, then you kind of miss the boat. You haven't quite achieved, etc., etc. So yeah, it does have an effect, and I'm glad to hear that the Chinese have realized that. Maybe they'll change a few
Well,
things.
it could trigger that left field economic shock if Carl Bass is right. So I don't know if you should be so glad about it, but at least it's an interesting lesson in trade-offs, which is, I think, what all of this is about.
Yeah.
The other angle of that fascinates me is that we've gone, I don't know if this is true, but as I see it, we've gone from a society where the children take care of their parents in retirement to the parents in retirement helping their children to buy property. So it's a totally bizarre world where a huge of that amount of that pension money or that retirement money is going to come from highly inflated property, but that's really just a transfer of wealth from the old to the poor. And so I'm really worried about the property price obsession that people in the Western world have. And I say that I'm in Japan right now, and I say that coming from a place where that reversed, and property prices are now extremely cheap, apart from in certain key cities. And society's done just fine. It hasn't been some sort of devastating crisis apart from that initial crash. So I wonder, do you think it's better for property prices to fall or rise in terms of, once you include all of the different impacts and factors?
Oh, definitely for them to fall. And I speak as one who has reluctantly has a second property, trying to get rid of it at the moment. But no, I do. It's sort of an ossification that we see in people's lives and in the economy, when you have this huge obsession of trying to get hundreds of thousands of pounds to buy a place, and that's going to be kind of the rest of your life that you're trying to pay it off. We have large amounts now of retired people still having a mortgage, which is a crazy thing. Actually, as you're talking, another pressure, as you know, is of course people living longer. And I was thinking, as you say, there are retired people paying for their children to buy a place, but also we have retired people who are retired for much longer than they used to be, and they're using up the money that used to be handed over to the next generation. So I think that's a consideration as well, that the young people, and if you like middle-aged people, can't assume now that they will be getting an inheritance, because their parents may have to use it all up in care homes and equity release potentially.
Let's move on to an unusual topic. I don't know if you know much about cryptocurrencies, but I was excited about them initially because it allowed just about anyone or
Mm,
any community to issue their own currency with a
mm,
set of rules that govern that currency.
mm, mhm.
And that boom is starting to take hold now.
Yeah.
My dad just sent me a 25, I think it was dollar or pound voucher from an example of this, where a group of people who like to travel a lot, they have launched their own currency that works on their website, where you can book these trips and you can earn that currency by leaving reviews about places, or making videos to show people what it's like, or that sort of thing. Do you think there's going to be a bit of a revolution in terms of how we use money as a result of cryptocurrencies? A bit like the community currencies that used to pop up in small towns that tried to keep commerce within that town, to get people to buy from the local farmers. They had a community currency from that local area. Do you think the same thing's going to happen with cryptocurrencies?
Well, yes and no. I'm actually a fan of cryptocurrency too. In fact, I do webinars on how to invest in cryptocurrency. Again, the most basic first steps, and I've always been excited by them. I started investing in Bitcoin in 2017. That was when I really I say understand. I'm not sure if one ever quite understands how cryptocurrencies work, but yeah, I'm interested in all sorts, and I am like you. I was excited and still am at the idea that individuals or groups can set up their own currency. I keep thinking about setting up my own magpies. What concerns me though, and we're seeing it happen in spades now, is that once the establishment get into it, that just ruins everything. And Bitcoin, as I'm sure you know, absolutely rocketed in the last few days because of the company ProShares, which came out with its first ETF that tracks Bitcoin. And that apparently that got, was it 3 billion, billions in 3 days or something insane. Once they get their hands on it, that basically ruins it. And even worse, I mean, screamingly worse, in my view, is governments getting their hands and going, "Oh, let's do our own cryptocurrency." No, no, I know it's going, no, not you particularly. So, I mean, I'm shouting at the moment against CBDCs, central bank digital currencies, because as far as I'm concerned, that's the end of civilization, literally the end of civilization as we know it today, because it's governments taking all the good stuff from cryptocurrencies. I mean, particularly smart contracts that you get with Ethereum, where you can just make the money do certain things, and you can disappear the money, and you can say you have to spend it within 2 weeks or it'll just disappear. All of this. And that should go through central banks, i.e. governments. That they should know everything you're earning, when you've earned it, how you've earned it, where you've earned it from, tax you at source, and then tell you when and where you can spend your money. I just think, shut up, I will not allow any of that. So, again, I think cryptocurrencies are sharp knives. Used properly, excellent. Put in the wrong hands, CCP, any other government, frankly, no, nightmare, absolute nightmare.
I'm fascinated by this because I've said this in the past, and of course, it got me lots of bad feedback from my friends and colleagues, let alone the readers who are big cryptocurrency fans. My argument was, or the way that I explained it was that, back in the day, Airbnb and Uber popped up, and they were basically skirting the government regulations. They took on the taxi industry and the hotel industry, which are extremely close to governments, in terms of all the taxes they pay and the licensing fees and all these sorts of things. And Uber and Airbnb came along and said, we're not going to do any of that, and our service is going to be cheaper and better as a result. And it worked. And over time, the government and the regulatory state has sort of co-opted those two companies into becoming sort of friends with the government, and actually paying some of the license fees and doing more and more regulatory things with the government, and putting up with regulations and complying with the sorts of things that taxi drivers have to. And now they're just not innovative, and they're no better than we had things originally. And lots of hotels advertise on Airbnb, or lots of holiday rental properties, and that tells you that they've lost what the whole point of the story was. And so I think the same thing is happening with cryptocurrencies now. The way I put it is they've lost their soul. The whole point was that they were against the establishment, against the government, against Wall Street and the city. And now they've just become completely a part of that whole little world. The best example is that ETF that you mentioned, which is based on Bitcoin futures, not on Bitcoin. So there's no actual Bitcoin involved, which is just a great example of the financialization of everything. Even cryptocurrencies have been financialized by the city. We've got to end on something good. We've got to end on something positive. Give me sort of the best idea in terms of the money making, money saving, and money managing, the three tabs on your website. What's the best idea that you can think of for each one?
Well, I always enjoy talking about making money, because there are so many really fun ways. There are so many side earners that I like to talk about. I mean, an obvious one, I was just talking about this last night to somebody who was retired and wondering what to do, how to make some money. And I said, go and do some extra work, be a walk-on. I used to do walk-on work. It's great. You get paid £100 a day to basically sit around. They give you lovely food, and you can do it anywhere pretty much, as long as you're sort of near somewhere where they're filming. And then we have all sorts of other daft ways of making money, like being a professional mourner. That's quite an Asian idea, or Middle Eastern, but it's come to this country as well. So there are some places where you can do that. You can sell your hair. Of course, there are focus groups, and where you can say what you think and everything. But there are so many daft ways to sell things. There's even, you can even sell toilet roll innards. People do sell those on eBay, and parents and art teachers buy them for fun things for the kids to do. So there's always a way to make extra cash. It doesn't matter what you're doing, whether if you're disabled, if you're stuck at home, there are always ways to make extra money on the side. That's what my big mantra. And then when it comes to saving money, what again, I have this mantra, which is pay yourself first. I'm a big fan of standing orders. And when I do talks on how to manage your money, one of the big things I say is pay yourself first. Set up a standing order at the beginning of the month from your account into a savings, and into savings and into investments, of course, so that the money goes out before you then spend it on the supermarkets and the restaurants and whatever. Because people always say, oh, I don't have any money left at the end of the month. And I'm like, nobody has money left at the end of the month. It's a human thing. You've got the money, yes, spend it. So you have to do it at the beginning before you start spending it. And then when it comes to investing, I'm a big fan, whatever age you are, starting to invest, and it can be small amounts of money. And what I say to people is, again, my big mantra for investing is spread your bets. Nothing is safe as houses. Even houses are not safe as houses. So a little bit here, a little bit there. Start with a bit of stock market within an ISA. I would say tracker funds because they're cheap and easy. And I'm also a fan of some of the peer-to-peer platforms. You get better money there, but a little bit here, a little bit there. And even collections. And I was explaining this yesterday about collections, in my view, are an asset class. And when I say collections, obviously art and antiques, also Barbie dolls, Lego, Hermes handbags. Some of these have done phenomenally well over the last 10 years. So have another look at the collections, whatever it is you collect. It could be that those are actually one of your best investments. You never know.
Yeah, especially during the age of money printing and QE and all that, those collections, anything tangible can perform extremely well. So to sum up, where can people go to find out more about you and Money Magpie? If they're the tabs are, I'm going to read them out: parents, students, unemployed, over 50s, or professionals. If you want to save money, make money, or invest money, where do you?
It is moneymagpie.com. And do sign up to the newsletters. We've got a fortnightly investing newsletter. It goes out every Saturday. We've got one coming out this weekend. And we've also got a Tuesday newsletter, which has all sorts of information on saving, making, managing your money, plus podcasts, plus webinars, all sorts we have.
Excellent. Jasmine Birtles, thanks very much for joining us.
Thank you.